Hi, this is Randy Finney with Right Side of the Chart, and today's Friday, February 2nd, 2018. I wanted to do a quick update on the active trade ideas on the site. Right now, we have a relatively small number of active trades. Most of those are ETFs. In the last few weeks, I've had a preference towards ETFs because we are in the thicker earnings season. And when you go with ETFs versus individual stocks, you have a much lower risk of getting hurt should a position gap against you. When you trade individual stocks, they report earnings either before or after the bell, before or after the market opens or closes, and therefore you're prone to large opening gaps. That gap can go for or against you. When you trade an ETF, it's the same premise of investing in it, into a mutual fund. You have a basket of stocks, usually several dozen, at least a couple dozen or more. Therefore, it mitigates any losses. Now, you can also outperform, do better trading individual stocks. So, as earnings season passes through, and some of these companies report, I'll add more and more individual trade setups. And as always, I cover them in video format. So, watch the videos. For every one official trade idea I put out there, I probably have a dozen or more unofficial trade ideas, easily a dozen or more in the trading room or in the videos. So you're welcome to trade those. And if you ever have any questions on those, want an update, price targets, anything else, by all means, just drop me a line in the trading room and I'd be more than glad to give you an updated chart and my thoughts on it. All right, so let's just dive into these. Corn, I don't have in front of me the entry points, but if you're in this trade, then you would know where we entered, where you entered at least. I added a resistance level here, 1715. I noticed there's a lot of reactions right here and a lot of reactions here, and so far, corn stalling there. I do think we'll take it out, but I just wanted to make mention. The gains on commodity ETNs, especially these ag commodities, they can move very fast at times, but usually it's a slow, steady eddy move up. And you could book partial profits here, but I still like this one. I just wanted to reiterate that. We had a divergent low here. It's well above the stop. We're profitable. And I do think we go at least up to this first target here at 1759. And I might, quite possibly, might add additional targets. I also like a lot of the other ag ETFs. I won't get off topic right now and go over all those charts, but as I mentioned recently, wheat, soybeans, and you can even go with JJG, which is a grain ETF and has corn, wheat, and soybeans in there. But there's some other ag commodities as well. And on the flip side, right now I'm bearish on other commodities, such as, especially the hard commodities, oil, gold, precious metals. I think copper is a little toppy, but again, let's stay on topic. We'll get to some of these other ones here. Okay, I have price alerts going off like crazy. I've already had since the market opened, and I started this video just a few minutes after we opened. I've already had close to half a dozen go off. This is the one that just went off on the screen. I'll watch it. Trend line was a little tight. I had a trend line alert, so I need to see a little more downside. And then this one looks like a short down here to about at least 67.90. So that's DWDP. But again, not an official trade idea now. So let's get back on topic. Dominion Resources. This is a utility stock. One of the reasons for going along this, among others, was I pointed out here, every single one of these white arrows down below marks oversold readings, meaning 30 or less on the RSI, and then you can see the bounces that followed. It looks just eyeballing. It's about a 10% average. So every time without fail in the last 2 years that the stock has been oversold, 30 or less, we've had about a 10% bounce. The yellow arrows mark close to oversold readings, and those still resulted in bounces. And more importantly, is these divergent highs. So here's my thoughts on Dominion. I'm sort of torn. I, 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 I'm still long. I'm long personally this one. Now that shouldn't matter to anybody else what I'm long, what I'm not long. But I do own this one, and I'm going to give it a little room. What I could see happening is one of two things. If we get more downside in the market, like I suspect we might in the coming weeks here, we may catch a bid to safety, a flight to safety back into utility stocks because they're steady eddy. If so, that should help us. We may go ahead and hit that first target before we even come anywhere close to the stop. Otherwise, I can see the possibility, and I really like, as you guys know, these divergent lows. Back here, we had positive divergence. We were oversold, then we came close to oversold again on the RSI. So we had positive divergence when prices made lower lows. I can see that scenario. So if you're patient, and remember, it pays a decent dividend, about 4.37%. This is one scenario here, and I'd be comfortable with this longer term. This is a utility stock. I don't expect explosive moves in it. And if so, if it goes down, as long as it doesn't undercut our stop, that would be a nice scenario there to see a divergent low put in the coming weeks. Might take a little while, and then a move up there, and that would also greatly help the longer term bullish case. So that's one scenario. Either way, it may not even take another low. It may not undercut those lows. It all depends. I do like the utilities right now near term, but I can't rule out the possibility just looking at these charts of one last thrust down to undercut those lows. And as of now, we'll leave the stops and the targets in place as is. ENDP, Endo Pharmaceutical. This one played out really quick. We hit a first target. We were entered, I don't know, we entered somewhere here, down right off the lows, hit that first target quickly for a pretty nice profit, and missed the second target by, I mean, pennies, if I remember right. They're set at 912. We got as high as over $9. I think it was 901, so we missed it by about a 10 cents or so there, the second target. And then the stock reversed, and a lot of that had to do with things that I covered recently on the generic drug makers. This one is still back testing. We're in close proximity to this trend line, a hair below it, but close enough. And there's also support there around 688. So I still like it. It's just right now we need to see this entire sector, the drug stocks, start to pick back up. We're well above the stop, but remember, I set my stops on the official trades. The stops are calculated typically based on the final target. So if you're only targeting T2, you should consider a more aggressive stop, again, based on your entry. I like to use at least a 3-to-1 risk to reward ratio, meaning I'll risk 1 unit of loss for 3 units of profit, or a dollar downside for $3 of profit potential is another way to put that. But as of now, I like it. It's just there's pressure right now in those drug stocks, and I'd like to see it reverse off here. It had a very powerful divergent low, so longer term still looks good for now. ITB, we added this one more recently. Looks like we may, I don't know if we hit it yet. Low 42. We're close, very close to the first target. Finally seeing for the first time in a long time these bearish chart patterns play out the way that they've played out for so many years. I've been trading for a long time now, and there are times in a very powerful uptrend like the market's been in where short setups either don't pan out, meaning get a false signal, or they play out but for a pretty small move. For example, ITB back here had a nice clean bearish rising wedge. You can see it there, confirmed with negative divergences. And it did. It broke down, back tested. Perfect technical analysis. Everything you like to see. You don't always back test, but sometimes you get a kickback rally, back test the wedge. And that one dropped. I think it was about, let's see, 7%. Yeah, a little over 6.2% drop. And so far, now on this wedge, we've already dropped about almost 10%. And look at that. That's a very impulsive move. We've had no kickback rally, zero. Straight down so far, almost to the first target. The wedge was a little more steep, which the steeper the wedge, typically the more sharp the fall afterwards. So this one looks very good, and I need to get this out quick before that target's hit. I may extend that the price target to some of these lower targets if I can get that out ahead of time in advance. And depending on what the market does, there's still the potential to hit this final target here down there at T4. I'll have to take a look at the charts, and a lot of that depends on what the broad market does. All right, let's move on so I can get back to work here. OSTK overstock. I've been stating, all along we knew, well, I think most of us knew that cryptocurrency, that was a bubble. It was a bubble waiting to pop, and the bubble popped. And since you can't, the only way to play it directly is you can't short cryptocurrencies because they're not traded on exchange, other than the new futures they rolled out just a couple months ago on Bitcoin. And I don't put futures on here because I know a lot of traders, especially those new to trading, A, don't have futures accounts, B, the knowledge to trade futures, or even the capital. It usually takes pretty large amounts to trade futures. So therefore, Overstock is my proxy for the Bitcoin mania, cybercurrency mania. As you guys know, it used to be like Amazon.com. They were, the owner was thinking about just selling that part of the business. They got into blockchain technology and all that good stuff. So, anyways, this is it. This is the trade. We shorted somewhere up here on this last breakdown. We shorted not far off the highs. I don't know exactly where. I'd have to look that up, but it's dropped already about 26%, and we're coming up on that first target, and I have, pretty high degree of confidence at least that first target will be hit, if not more. Again, this is, um, if you look at I have a proxy uh, watch list for cryptocurrency. Again, these aren't all direct plays on cryptocurrency. They're indirect plays like CME, because they were going to trade the futures. You can see that divergent high. BlockV, CBOE is another exchange that has Bitcoin futures. Overstock, there's a daily chart on Overstock. Breakdown, pretty impulsive selling, sharp divergent high. So if you ask me where I think Overstock's going over time, I think it'll, before all is said and done, it's coming back to at least $48. It's at 64.55 now, so that's about another 26% drop. NYXBT, that's just the Bitcoin index. You can see Bitcoin's fallen about 48% or so on there. BITCF, not much there. Riot blockchain. Here's another one. I mean, this is what happens when a bubble pops. This one's down 75%. I'd hate to be the sucker that bought right there. GXBT. This is the Bitcoin, Gemini Bitcoin trade price, down 56%. And just different blockchain companies that I have here. You can see the trend. And it may not look like much. This is log scaling. There's a 65% drop so far off the highs. And finally, BTSC. This one's already down in just a month or so, about 86, 87%. So again, you can't, you look at this chart, you say, oh, that's a minor correction. No, you've lost almost all your money if you bought it at that high, because again, you use a log scaling. If you don't use log scaling, this is what the chart looks like. That's why I like to use log scaling there. All right, moving on. That was a little off topic, but we only have two more. SOXX semiconductor. Still, I think this one offers, as I've been saying, a tremendous amount of meat, huge profit potential. You can't call the semis a bubble. You can call them extremely overvalued, overowned, and overloved. But they had a nice controlled ascent up in this price channel. Now, the price channel hasn't even broken down yet. And again, if you will trade this as you want, we shorted this one, I forget where, but somewhere, we looked at the 60-minute chart back test. I know this trade's profitable by a decent amount. If you want to cover when we hit the bottom of the channel, that's about another 2.75% below. Great. First target's about another, I don't know, 9%. Cover where you want. I'm holding out personally and expecting a break of this price channel. And when that channel breaks, it's a very long multi-year price channel, divergent high, and I think there's huge potential to be made. You can buy, if you don't short, you can buy in other words, if you don't have a margin account where you're able to short, you can buy short semi ETFs like SOXS. That's 3-time leveraged, and there might be some other ones out there. But the profit potential from this point, I still see another 23% downside in the semis before all said and done. It's not going to happen overnight. It's going to take us probably a few months to get there, but that's where I see it going. And then finally, XLE, energy sector. Well, we're at the pretty good support right there, 73.81. I shared this chart recently when we were right here coming up to that previous reaction high. We're extremely overbought, high level PPO bearish crossover. That's a daily chart. This trade was based off the 60-minute chart. And you can see so far we hit the first target and now we're below there. That was support. We undershot it a little bit, popped up above. Now we're moving back down. So next target's here, but again, I should point out that this is a decent support level on the daily chart, and I probably should have factored that in on that 60-minute chart with the price targets. So if you did short this one or any of the leveraged ETFs like ERY, 3-time bearish, you could certainly take some profits here because we may get a reaction. But Chevron and ExxonMobil both are trading down after reporting this morning. And again, I think there's more downside to come. In fact, I think crude has only just started its correction. So more downside to come in the energy sector. And that's it. Again, there's a lot of unofficial trade ideas out there now, and I'll try to get some more official ones out there as quick as possible. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.